Okay. Scott, thank you very much for the intro. Brad, how's your audio?
Boom. Welcome, Wednesday. Good afternoon, Dan.
A good rainy afternoon in Southern California. I thought there was a song, Brad, that says it never rains in Southern California.
It barely ever rains in Southern California.
Barely does. Okay. Well, everyone, thank you for joining us for our Wednesday Q&A. Very exciting one today. We're really going to dive into some simple concepts that we've been these are things that I think many people might miss, but we're going to show them to you, and it's going to be a great lesson on how to understand some of the data, and I think you're going to get a lot of value out of it. So let's get going. First of all, please know that Trade Ideas is not a registered investment advisor. All the information that you are going to hear from myself, from Brad, Scott, Barry, or anyone associated with Trade Ideas is for educational and informational purposes only. If you need specific tailored investment advice, please consult a registered investment advisor. Okay, so Scott, when we did the questionnaire, what's the breakdown of the people who are subscribers who are not subscribers?
Like
We got
half
about
and half.
53% subscribers today.
Okay, great. Well, listen, this is how I'm going to open it up. We had a marketing meeting yesterday, and you guys, this is just such good stuff that there's no way you could do this, what we're about to show you, without really having the ability to show you what I'm going to show you. But we were discussing, and I like to do these Q&As, Brad, not just simply, reading off of the slides and trying to bullet point my way through it. I want to really communicate openly, speak to people honestly about what it is we're trying to do.
Well, this is why I love what we do. So I'm really glad you started off with it.
Yeah, but in the marketing meeting yesterday, where people were talking about how do you describe what's the elevator pitch that you would give to somebody that wants to use Trade Ideas or figure out what you're doing, et cetera. And I was really trying to say that, to me, that elevator pitch concept is we're the best at finding things, signaling you on things that are otherwise almost impossible to find without us. And I want to explain what that means. And the best way to start is with what we do, right? So Trade Ideas is a signaling service, meaning that we have technology that alerts you via buy and sell signals, very advanced technology that's doing statistical analysis. And Brad, we talked about in our marketing meeting how there's a lot of commercials right now that are really aimed at Amazon Workstation, but they're talking about all the statistics for the NFL, how people are using statistics to try to place better bets. Well, that's exactly what we do at Trade Ideas, except for NFL players, we statistically track every stock. We track its up moves, its down moves, and all the potential statistics you could ever come up with, we do that on the server. This is nothing that anybody could do on their own computer. We have a whole server farm here in San Diego that's doing this full-time, real-time, all the time. Did I miss any of the times, Brad?
No, it's all the time. But it's because we're taking what's normal stuff out there, we're bringing it into our data center in San Diego, and we're creating new data from that. And with that new data, we can spot these types of opportunities. We can see the different footprints of market activity that exists, whether it's price action or volume, anything like that. We spot it, and through our tools, we show it to you.
That's right. And this is where, again, we excel beyond anything that you're going to see in other services. I'm going to show you how and why. So I'm going to minimize the PowerPoint. I'm going to just jump right into the software. So this is our AI, and what you're seeing here, if you guys aren't subscribers, don't worry about it, because it just takes a little bit of getting used to. But these are the signals. This is a channel bar, okay? And you can look at all of our AI channels, but I'm specifically focused on the one that generated the signal for AUPH, which happened at 8 a.m. Pacific time. So we're in California. That's why you're seeing my readout at 8 a.m. You can look at the exact time of the signal. And the entry price for AUPH is 838. So there's different ways that you can trade this information. You can, get in and out of it just for the day. Like, you can get in. Typically there's a strategy, and I'm going to show you some things that I was doing and how I do it. And again, if this is something that you think you can imitate and you think it makes sense, I think it's not that tricky to do. So first of all, again, these are all signals that we are generating for you in real time. And this was AUPH. And after hours today, and that Brad, we've talked about this often, that, there's this mixture of information about intraday trading versus long-term trading versus swing trading. But if you study the data enough, okay, what you kind of find is this. If you're completely only day trading, meaning just in during the day and out at the end of the day, you suffer from just the random winds of the market. Even with the best statistical analysis, if you're simply only intraday trading, it gets a little tricky, because over time, what happens is you will have bought AUPH, made just like a smidgen of money in it, and missed this move. This move happened after hours, and most likely will continue somewhat tomorrow. If you're in it to buy and hold, you don't really need trade ideas. There's no point for that, because you're in it, you're buying and you're holding, and we're not. I mean, again,
I would say, I would offer the notion that because we are looking at the stocks all the time, you could use our technology to find an optimal entry point.
Of course, but really, Brad, if you're in it for the long term, right, optimal entry points aren't even that critical. You're just in it and you get in. Exactly. So if you do any kind of research, the real optimum statistically viable way to trade is what's called swing trading, meaning that you get in, you can hold it you can of course get out during the day if you're not positive, but you can get in, and if you're positive, you can try to stay in the position through the prevailing winds, and ride the ups and downs of it for intermediate term, because again, that way you're in the sweet spot. Long term, it's too hard to predict, because who knows what will happen. Short term, there's just a lot of random movements in every direction, so also a little bit tricky, which is why we say the best time is the swing time. And this is where you have AUPH. Here you go. You're in it, you bought it at 838, and it is right now in one day, same day, up 100%. Okay, and it's not like we are pretending, it's not like this is a hypothetical. This is a signal that happened. Here it is. You see it all. This is what it's about. This is why you're here at this webinar, okay? Brad, we can spend so much time diving into the intricacies of how you set things up and all the things that people get lost in the technical analysis. But the reality is, it's the signals and how you work with them. Now, what's interesting is I actually love Kevin's question, so I'm going to read it out. Kevin says, but what signal tells you to follow through with AUPH? For example, I left adhering to the conservative Rex. Okay, so Kevin, great question. There's different ways that this is the fundamental question of, and remember what I said, if you are up in the trade, right, you have to be able to handle the risk of an overnight position if you're holding it. That risk is only known to you. If you want to trade conservatively, again, you can, and you can still make money that way, but I'm just saying that you have the potential to miss what's happening in some of these moves. And there's no way to be able to say that this is a guaranteed thing that happens all the time. It's just that statistically speaking, that is what we're hunting for. And so what I'm saying is there is a methodology to how to stay in the trades longer, and I'm going to show it to you. But does everybody understand that the name of the game is AUPH? Meaning you want to get into it and see if you can maintain. Yeah, no, Kevin, and a lot of times that happens, and I'm going to show you guys some ways to work with that visually so that you don't get stopped out of the position as much as that happening to a lot of people. So let me bring this up real quick. Okay, so everyone understands? No other questions about this so far? Okay. So I'm going to bring in, so did you see this right here is our channel bar? Okay, this channel bar is a great little piece of technology. It lets you peruse various things that Trade Ideas does without you having to learn how to configure anything. And this is kind of set up by our, whoops, let me just go back to, set up by our own team. Okay, so by the way, what happened in AUPH, look at some of these other ones. No, Anthony, that does not mean you need to get in after hours at all. Again, I'm going to get into I'm going to get into how I played the AUPH trade. Okay.
Pull back that disclaimer.
Yeah, seriously, absolutely not. We're not saying anything of the sort. What we're saying is that look at the amazing moves that are happening in the stock market. I mean, this is what you're here for, ladies and gentlemen. If you're not a subscriber to Trade Ideas, but you kind of understood or glimpsed or heard about the stock market maybe being something interesting, etc., look at what we're showing you.
I mean, that's a super interesting one that happened. That move, the major part of that move was all midday today, towards the latter part of the day, but all during the market. Looks like there was a halt there, you know, because of the inordinate move that it had. But the one thing that I look at that, Dan, I see all those volume bars down at the bottom, much bigger than the previous ones. And it's just one of the characteristics that at Trade Ideas we do very, very well. And that's take a look at volume on all different time frames. And we take statistical baselines of everything. So when something crazy and abnormal happens, like right here, the software is set up to tell you that this stock right here is trading incredible volume. The price is moving much more than normal. Take a look.
And you can go back in history and see like what happened today in an earlier point in time. But what I'm trying to say, and this is what I was saying before with how we do it differently, we have this channel bar. So this is a channel called Ready to Run. And Brad, what did this do? It ran.
Yeah, it ran for sure.
I mean, we've designed this using our own skill set. You know, you can kind of see that we're trying to find these types of moves, these incredible breakout moves, especially in the pharmaceutical space. Here's another example of just notice that the AI is trying to catch this and look at what it's doing. And we're going to show you how you stay in it. Okay, so that's, first I'm trying to give you guys, the new people, just a high level overview so you can see what's going on, how it's done. The fact that notice you didn't have to do anything. I just clicked on a Ready to Run and here's some stock symbols. And the beauty is this, I'm going to hit play here. Watch what the software does. Okay, it's going through things. I'm like, oh, look at this. I like this stock. I can right click and create an alert for it. And by the way, we're going to make this a lot easier for you very soon. And I'm going to set it to 10. Just say looking good. Here you are. You can take these. You can drag and drop them. You can do all sorts of different things. See, like I can change the prices a little bit. Kevin, yes, these are the signals. So when we were talking about, which one was it? Right here on CWH. This was a signal in Holly. And in let's see, it was a conservative mode signal. So it's kind of like the same situation where we're saying that we give you an entry and an exit every day, but it's up to the individual user to see what they can do based on their own risk tolerance. This is the part where it's man and machine. You know, if there was a get-rich-quick scheme out there that really worked, wouldn't everybody be doing it? You know.
A really good methodology is to combine, in the longer term scenarios, to combine our AI alerts with our price alerts so that you have that lingering signal so that days later when it actually crosses that threshold, if it's days or hours later, then you're alerted to it. You're identifying that movement. You don't need to be watching it at that moment, and then you can go ahead and make your decision on whether to participate or not.
Right, so Kevin, the price alerts are the ability to right-click at any stock and set an alert at any price level that will pop up and give you an FYI. Okay, so let me just go to another channel, and we have lots of like different channels that we've created for you guys based on, again, our own skill set. Notice again here's one that caught another channel that caught AUPH. Now this one obviously it's sorting by change from the close, so it wouldn't have been there. It's only doing this because of after hours. But what I'm really trying to communicate is that there ought not be any fear that, oh my God, look at his setup, it's so complicated, I don't know how to do it. And there's nothing for you to do. In fact, again, the software will surf for you through all the different stocks, okay, in your channels.
So that was an interesting one right there, CGIX. So if you hover over that, you can see the price alert, it's green. That means the color indicates that it's been triggered. So at that point that it crossed that threshold, it triggered, but you had great eyes on you. You put that threshold there because you saw something, you felt something, and as soon as it crossed that, boy, look at the acceleration.
But what was kind of cool too is that the AI itself, so here I'm trading in sync with the AI. I had a price alert here, but then the AI caught the move right there.
Yeah, and you can see you had that price alert a couple days prior to the AI, right? So
Yep.
You can see where that blue arrow is pointing right to that candle. That's where your price alert was. And then you could see that right arrow, the buy signal, that's the AI.
So do you guys see like how this is really the most powerful virtual analyst, the statistical engine that helps you see things that you're not going to see unless you have it. I mean, that's all I can say. I've never been more excited and proud of the technology that we're bringing to the table. And again, the best part is we can just sit there and look, guys, we did it here, okay? And you can see that once again, like, so let's imagine in a conservative mode, right? I want to talk people through this. In the conservative mode, this was an 18-cent loss, okay? But you could have simply gone and created a price alert that was above the entry signal, something that we're about to automate for people anyways, by the way. And here's your follow through. So imagine you're going to have, for people who have a premium subscription, you're going to have an ability to set alerts that anytime a stock is trading back above the AI signal that was generated whenever, it's like when the signal turns profitable, you are going to right away be notified. Yeah, Anthony, we're gonna do all of that, absolutely. Okay, but what I'm saying is you can do this right now. So let's go back to, so we have a channel here, okay, and guys, I mean, notice the signals. I mean, I want to pull something that Barry, our trading room moderator, and for those of you who don't know, there's another way that you can access like a good warm up to trade ideas and a good way to learn through Barry's trading room, which I'll have a slide for in the Q&A webinar. But this is where a lot of different types of users of trade ideas come in, and they come together and they exchange ideas. There's a meritocracy. And here's another one. You know, we're not a one-trick pony. So from 4 to 795 in several days. So Kevin, yes, we have all of the results for risk on and risk. Whoa, Brad, look at what just happened. You guys just saw this in real life.
I don't know if I believe it yet.
Not yet? Everybody seeing this? Could be BS, but could be not BS.
I don't buy that yet.
But still, it's kind of exciting to watch in the middle of a webinar, don't you think? I mean, I think so. We'll come back to it. But what I'm trying to say is that here we have these signals that we give our users, our subscribers, and the signals are designed to create a kind of an opportunistic flow throughput that simply cannot be matched anywhere else because nobody else has our data. Okay, and I'm going to show you the technique, and the technique is simple, of how you are able to stay in these trades, and it's a two-pronged technique, all of which I've kind of already mentioned, but I will just reiterate it when I get to it. I just love being able to, you know, I don't think I've ever seen it like that. Barry, I know you're watching this too. I mean, you see that? This is, guys, this is why it's fun to be in our business. Now, I know Brad says he doesn't buy it yet. Let's see here. But we'll see. Brad, does the 15-minute do after hours?
Let me tell you why I don't buy it. I'll tell you why I don't buy it.
Because of the volume?
No, I don't buy it because on the daily chart, typically the daily chart is really only built during market hours. So when you have some crazy move that happens after hours, we're just going to get a price for that. The bar is not going to reflect it. And, you know, so it's probably a bad print. It's probably something that's just going to get broken. But what you would see is you would see it on our intraday chart. We have our post-market up. You would see it. You'd see all that action going on. So that's why I'm thinking it's not real. It's just some.
But the pharmaceutical sector is in such play, you know, in general, that these things, it's kind of, again, it's just fun to watch. Okay. So
but it happens all the time like that, right? You do see it in real time when this stuff happens. You can go to the after hours channel and you probably get a better flavor for that. And by the way, just as you're going through these channels, guys, we made these workspaces for you, right? But these are all examples. You can take these windows, you can change them, modify them, move them, add some channels from one window to another, and then create your own. So this is a starting point. This is a way that you can get running, you know, started without having to learn how to configure it. But you could certainly grow into this as well and learn a lot of the techniques that we've used to put this together.
Yeah, there could be some weird prints going on because this is kind of the opposite of that one, right, Brad?
Yeah.
So, and by the way, this happens in the stock market, strange prints that the market needs to clean up. And again, usually they do that without any kind of problems. So so this is our after hours post-market action. You can see what's up and down the most. And again, you know, yeah, it looks like there's some weird.
Yeah, you look at the post-market volume, right, and you have very little that's happening on those particular moves right there. So
it just looks like some weird stuff going on. But certainly the AUPH was 100% accurate. I mean, because again, it's on both, as Brad said, and that's really a very good indication of what's going on. So
Dirk's asking a great question right now as you're scanning through the channels.
Right. So do we have a channel for gaps? Is that why you're?
Yeah, I would go to the pre-market channel. The pre-market channel is a great place to get started when you first fire this system up in the morning. Pre-market movers right there under the stocks you like. And this is giving us a couple different scenarios. We're looking at up gappers, we're looking at down gappers, and then over on the right-hand side, we've got a multi-strategy window that's looking at stocks that are moving during the pre-market. So giving you some different information, insights here.
Right, and notice once again, I want to reiterate that you didn't have to sit there and try to make it and do that kind of stuff. It's already done. You just have to go to the channel bar.
Maybe you can show them how to pin it, right? And then take that up gapper, pin it, and then go to another channel and
Sure.
move
So let's say you take this, you can move it over here, right click and say pinned. Okay, so now then I'm going to go to my earnings channel. And my up gappers are still right here.
So you can use that technique to combine a variety of different windows from the different channels to make your own. And then on the channel bar in that upper left-hand corner, that little gear right there allows you to create your own channels.
Right. So, Mike, a lot of the channels are pre-configured for the moves. So they aren't designed specifically for you to say, okay, in this channel, I only want to see X market cap. But what you can do is you can do that with any window. So you can right click, you can configure, and you can search, let's say, market cap. Okay. So you can add a filter to it, and here it is. You can say, let's say 2 billion. Just kind of sounding out. Hit OK, and now everything will change to only stocks that are $2 billion market cap.
And you could have added that market cap as a column so you could see that data. You could, I think you have it over in the single stock. So this is like a piece of clay. You can really form it however you want. Pretty powerful stuff.
Look, market cap, columns. Okay, so now I'm gonna, there you go, scoot that over. And every single one of the windows and every single channel can be modified this way. Okay. So Kevin, very soon you will be able to get Holly Signal text messages and emails and things like that. You just can't do it quite yet, but we're working very diligently on our SMS messaging and all that kind of stuff. So all that's coming. Yeah. I mean, there's already stuff that's been done like that, but we're going to make it easier for people to use. All right, so let me tell you what's really critical. I mean, and again, I cannot overemphasize what I'm about to switch to. So we have a channel here, Shall We Play a Game, Brokerage Plus. This is what separates us from all the kids, from all the other bad kids. Let me move these windows just so that it's easier to see. Is everyone able to see my screen well?
Yeah, looks like it's coming through.
Okay.
It's like that AUPH is paying you after hours.
So I was an AUPH. So one of the things I want to show you is what I'm doing is, number one, I'm using what's called Trade Ideas Simulated Trading. Guys, listen to me very carefully. You want to know how to do it. You want to know how you get comfortable doing something. You have to practice where you're not going to lose money. Okay? I cannot overemphasize this enough. Delay your need to get rich quick, okay? And practice on your skills. This is what professionals do at the golf range. This is what professional basketball players, football players, and everyone else, this is what they do, okay, to get better. They practice the skill set required to be able to handle it during game time. So this is a simulated trading environment, and I, who have been trading, my goodness, you know, I'm about to turn 49 years old, and I've been doing this since I was 25 years old. Brad, that's a lot of years.
Yes, it is.
Oh, we're getting old. But the reason that I'm saying this is that there's no other way to learn a new skill without experiencing the grave consequences of the losses. You know, it's like, imagine if you could only learn how to play golf if you played. It would take you forever because, you know, you have to tee up and what are you doing? How are you hitting it? It would be impossible. But on the range, you can hit lots of different shots, okay? And you can do lots of different things. So this is your range. And we've also talked about how this is, if you're in medical school, this is the cadaver that you work on. So we have fully simulated trading that's there so that everything you do, you can go to a stock, you can right click on it. Let me pull up something that I'm not in. Okay, like something like this, right click and say trade, and you can specify what you want to do. And one of the cool things is, let me do this after hours for you so you can see it, because I think it should work after hours, right, Brad?
It should, even though it shouldn't.
Well, but it's good to show. So one of the cool things that I'm doing here is I'm getting into something, and notice this, and this is done, of course, in the real trading environment too, but do you notice how our software automatically sets a stop for you? Okay, notice that I got into a trade and it automatically set the stop for me without me doing anything. That's one of the critical things to being a successful investor, is making few mistakes, doing something and making the kind of decisions that lead to successful continued decisions. One of these is to avoid big losses. You do that by setting stops. Okay, and how do you know if you stay in a position or not? Well, I'm going to tell you, it's kind of, there is an interesting, simple way. Okay, and that doesn't mean you would have automatically have gotten into AUPH, but this is how I was able to stay in AUPH. Okay, so my entry on AUPH was $8. Okay, and at the end of the day, it closed, where did it close without the pre-market? $8.39. So I was up $39, 39 cents. So that, since I was up, I stayed in it. Do you guys see what I'm saying? Since I was up in this trade and I only had 125 shares, and this is in simulated mode, but I'm practicing what I would do in real life. I stayed in it, and look at what you can do with 125 shares, Brad.
And I'm sure you stayed in it for more reasons than just that one. I mean, it's probably maybe your overall profitability was up, maybe the spiders were strong, you know, something. It wasn't just that, right?
Well, to be honest, I was actually, without this AUPH, I was down about $200 in practice trading. But that happens during the day, and the idea is that then you're wanting your winners to run. Let me show you what I'm trying to stay in so that you guys can see it. So here are my open positions, okay? Notice the ones that I'm still in have very small losses. So here's one where I'm saying, okay, first of all, do you guys see my stops are in? So when you get into a trade, even when you're holding it overnight, what do you have, Brad? Your stops. They're still in.
Looks like you don't have one stop set, but all of them look like.
Right, and I will fix that tomorrow. But the idea is that your stops are your insurance. Okay. So you stay in based on profitability and or your risk. So in this case, I don't want to be, my particular rule is, if I'm down over $100 in something, I'm not going to stay in it. So this was just kind of right there. And again, the price is such that I'm not worried losing, you know, the money if it had some critical news and went down to like 3 cents. It's not going to destroy me. Okay. Look at this one, HMSY. Look at the bigger picture, right? It's the same thing. What am I trying to do? I'm trying to catch this big reversal, okay? And so I'm only in 136 shares. So my rule is I'm getting into $1,000, roughly speaking.
Looks like this one, you stepped on it a little bit. Added some size. Well, you're in 4,000 in this one in particular, right?
Right. I did add
Great
some.
distribution.
I like this kind of reversal pattern.
Yeah, well, I can see where you added to it as well on the intraday chart, right? You've got multiple buy flags giving you that indication.
So I bought the original one, and then I added to it.
Yep.
See that? And then I just continued to follow through. And again, it doesn't mean it's going to work. I mean, I could get stopped out, but I'm going to show you some cool stuff that you can do to, again, The idea here is to trade visually and trade comfortably. I'm going to show you guys how to do it. And this is some of the coolest stuff you're ever going to see. Okay. So Brad,
and by the way, you don't have to trade this many positions, although with Brokerage Plus, it makes it fairly easy.
But can I say something? Because I'm in simulation mode, right? I have a lot more freedom to try it out.
Well, and figure out what you are comfortable with.
Exactly. Have a lot more, right? And I'm working on my flow, my feel through trying to manage my positions, my overall P&L. Did you guys see what I'm saying? And your P&L throughout the day. Notice where else have you seen in a service that makes signals where you're tracking your P&L throughout the day? I'm just asking a question. Do you guys know? I don't know another one. Seems silent.
As a trader, like we've been doing this a long time. We've been in the market for a long time. We know this is a really valuable asset to your trading, to know, to have the historic. You look at it on a chart, right? You want to see where, well, it's important to know how you're.
1,000,000%. And so once again, the idea here is relatively simple. If you're up, see if you can stay in it. Remember, your stops are in it. Now I'm going to show you something again that's really critical. Notice this column right here. Does everyone see what this is?
Downside.
Well, I know you can see it, Brad.
Well, if I can, I'm just pointing it out for people.
Right, but I want to make sure everyone's looking and they're processing what they're seeing. So this is telling you how much you would lose in this position if your stop was hit. Now watch what I'm going to do. As I move it right below my entry point, you know, it automatically adjusts. Same thing here. Let me move this back. See, it got bigger as I moved it down. So the idea here is you are able to visually track your positions. And let's say you're in a trade, and like in this one, and you're in the stock and you're profitable, you can then visually just adjust your stop. Move it to where you're now no longer on the downside of the equation, but you're on the profit side.
Right, so and how do you know which one you want to modify, right? You can just look at your position grid right there, look at that downside column and see which number, boy, that's too big. $1,200 I could lose out of this one. Boy, I want to protect some of that. That's kind of the mindset that goes into it.
Yes, thank you, Glenn. I mean, this is a critical feature. So the idea is that this is where our technology takes it to the next level because, and I was saying, what you need to do is just add the downside column to your Brokerage Plus. That's it. You know, we have columns. You can right click. There's downside column. Upside is for your profit target, by the way. But in this case, I'm working more on the risk side of the equation. And by the way, I mean, I have a very advanced version of the software and I'm testing stuff. So not all of my data is quote unquote perfect because again, part of what I do is I test things all throughout the day. So I'm just saying if you guys are seeing something that's slightly different on yours, don't worry. But the idea here is that you can visually now work with this here, you know, like, okay, you know, nothing to worry about, but also I'm not really up a lot. I mean, my downside is close to my P&L because this position is not doing anything yet. But if you looked at, but so you can ask yourself, so Dan, why are you in it? Why did you stay in it? Kevin was asking that question, so I'm going to answer you. Kevin, the pharmaceutical space has been on fire in terms of acquisitions and developments and all sorts of things like that. So these are the kind of stocks that right now are just have the potential to do the AUPH type of move.
Yeah, so and the therapeutics.
Huh?
And the therapeutic stocks.
Yeah. Look at this one. There's another one. Guys, all of you take a look at LJPC. Okay, this one has been one that's been beaten up significantly. Okay, it's at $3.30. But look at this turn that it's having right here. Do you see that? You love that. Now you can say to yourself right away, right click, create a price alert, and say, Dan told me. Who's that Dan genius? Okay, and now you will know instantly in this window right here, the price alerts window, when LJPC starts filling this gap. Okay, so Kevin, let me explain, or Brad, and I'm about to lose my words. Why don't you explain what is the difference between moderate, conservative, and aggressive?
Okay, so
It's a good question.
yeah, it's a great question. So let's start off with the conservative. Every one of these strategies that's generated through our AI has a time horizon associated with it. Could be an hour, could be an hour and a half, 2 hours, could be the end of the day. And that's essentially the time horizon that's used as we create the statistics for the back testing and the optimization. So that is our conservative, right? So there's a time horizon to that. There's also a stop value that could possibly be hit. There's also a few algorithms that we use, like profit save. So if a stock moves up a bunch and starts pulling back, we're going to lock in some profit. So that's all under the conservative aspect of our P&L. We used to call that risk off. And then we have a moderate version, and the moderate version is trying to hold these positions until the end of the day. So we're going to hold every one of these ideas until the end of the day and determine our profitability based on that. But we're also going to adhere to any type of stop loss that may occur. So we all have stops in every one of these, and if a stop loss gets triggered, we're going to go ahead and get out of it and benchmark our P&L at that point for that position. And then the aggressive, which we used to call full risk, the aggressive is not looking, we're taking all stops off the table, we're going to get in all these positions, and we're going to hold it to the end of the day. So in addition to keeping all three of these different P&Ls, the real value is it's letting you know, how's this market reacting right now? Is there follow through? Is there volatility? You know, what's going on? But just because a particular segment is determined to be aggressive or non-aggressive, it doesn't mean that each position should be like that. So you have to you're going to get a flavor for the day. How's the market treating these AI segments, aggressive or not? But that doesn't mean that it's black and white, where every position is aggressive or every position is conservative. It's not how it works.
Right, and Brad, I think one of the reasons that it's hard for people to grasp is because if you look at the Dow Jones today at the very top, notice you'll see how much the Dow Jones was up, 146. Well, it started off, gapped up to being up almost 200 and kind of faded. Let me actually click on that so you can kind of see, right? So it started, well, maybe it started right here.
Bring it a 15-minute chart so we can have a multi-day look at it and you can see the gap a little better.
Yeah.
Time frame right there.
So here you gapped up, traded up a little bit, but then basically closed right at, I mean, aside from the gap, nothing happening.
Tough day when you're talking about establishing a position and being profitable at the end of that.
Well, which is why P&L, your own P&L, is the critical component, right? So I got into this AVXL, okay? And let me just show you again, this was right here. It was one of these things that, was that, Brad, was that also an AI trade? Can't see because it says B+, or was that just me?
Yeah, honestly, we changed it to B+ if you're instigating a trade. I don't know if
we need to modify that. But the idea is that me personally, right, I've made enough mistakes buying it right here, and I actually did that in one of the other examples I gave you guys, where here what did I do, Brad? This is called buying the pullback. So I spotted this as it was doing this action. I was like, okay, I'm going to buy it right here. Just put a tight stop. You know, you can always play around with that. Look at that. Like in this case, my stop was only like 7 cents. It's almost 2. See, that's what it makes me feel like, Brad, because we had a smart stop in there. I think this was also on the AI.
It was not. I looked while you were talking. It wasn't. But it doesn't surprise me that you traded it, because if I'm looking at your single stock over there, the relative volume is 8. So that's 8 times normal volume. That's a pretty significant value. It had a tremendous run up pre-market. So yeah, I'm sure it was on your radar.
And of course, pharmaceutical preparation, which is the big, game right now. Let me ask you guys. Yeah, let me ask you a quick question. Did any of you here participate in our just recent test drive? Are any of you guys ones who came in to trade ideas from our test drive? Don't anybody answer all at once. It's okay if the answer is no. I'm just curious. I mean, maybe we should have asked that question before, because we had an amazing test drive. A lot of people are working with the software, and I was pointing something else out to them. And I'm just, you know, once again, look at this. So this one was so beautiful, and for Kevin, notice this was a moderate risk move. Look at the entry and the exit, 2 points, okay, in this one. So this one would have given you enough strength, right? You would have had enough to be able to stay in it. And look at what happened thereafter. It never, this is one of these, what we call, you know, the 300-yard drive. It never saw this price again. That's another thing that it's about. Now, this one, of course, isn't a buyout or whatever, just every day, boom, boom, boom. You know, continued, and even had another pullback, and look at that. It's about to, I mean, about to do it again. This is another one that we talk about what we are about, okay? This is where our information is heads, tails, towers above the rest.
But until you're in it, right? Until you're actually in that position and you're up there at the top of the range there about a week ago, and you're experiencing those 2 down days like that, you know, that's it's not easy, right? And so you have to be making decisions. Is it okay to be down here today? Is it okay to be down a couple days in a row? It's all about your risk tolerance. So there's no one way to take a position like this and trade it. And
that has to do a lot to do with where your entry is. You know, in this case, this pullback would have been okay. Kevin, what are you saying you don't see? This part? So back testing, Brad, remind me again, is it back testing is a premium feature, isn't it?
Yeah, back testing, you need to have a premium subscription.
Right.
And you can only back test the alert windows.
That's right. And you can back test, you can create your own strategies, all that stuff. You can. If you have the premium subscription, you can back test your light symbols. This is the whole point of being able to kind of get a feel for what you're going to expect ahead of time. But then the next step, ladies and gentlemen, is to practice in simulated mode. Like, I would not feel comfortable doing this kind of, and by the way, one of the cool things about premium is that I can turn on the AI, obviously market's off, but I can simulate trade the AI so that I can see what to expect if I ever turn it on live. And by the way, you can even go in a situation where, notice how you can, so you can connect to your interactive brokers, and through what you see on your simulation, you can then potentially go right to your live trading environment and go into it if you feel comfortable. But I cannot, once again, you know, Brad, you and I have talked about how much we are so potently screaming at you guys, don't just jump into everything without being able to simulate what you're going to get.
Yeah, I mean, look, when we were starting out, there was a saying, you know, the dollar value can change, but you don't enter into this endeavor without expecting to lose significant amounts of capital, you know, while you're building your knowledge base in the market. And it's just not necessary. I'm not saying you're going to get out there and instantly turn profitable, but it's not necessary to use your capital for your education.
Right. This is the whole point, that our premium, think about this, guys, okay? And we've, Brad, how many times have we mentioned this in the webinars? Our medical school costs you $50,000 a year. Law school, some the good ones similar. When you get out of medical school, you go to residency where you are a resident for 4 more years. That means you're making you're a doctor, but you're not really driving the nice car because you need practice. If you're a surgeon, you're working on a cadaver. If you're not a surgeon, you're still following another doctor and seeing what it is that they do. Simulated trading, trade ideas cost premium. If you have no discounts, which a lot of you guys get for coming in here, trade ideas costs you $2,200, no discount for the year. That's zero, okay? And that's premium. That's what simulated trading, AI, everything you want. How can you not invest that into yourself to really learn to get a feel for what I'm showing you here, where you're like, oh my gosh, look at this P&L. Like, this is the thing. Nobody, without, like, I now feel this in simulated mode, whereas nobody who doesn't have this way can feel what this feels like. So to answer Kevin's question, right? Like, how do you know to stay in it or not to stay in it? Well, something you will have an instinct, like a gut feeling with the rules, right? If you're up, try to stay, maintain your stop, get feedback from other people in various trading room potentially. You know, you can have like a little bit of consensus from people, but the point is, unless you see this happen, you're not going to have an instinct to want to do it. But with simulated trading with real-time data, Brad, what do? You get the real feel. This makes me feel much more comfortable to go and do it all in real life, because otherwise, guys, you know, again, you're like wanting to be a golfer, but you've never hit golf balls at a range. So this is the kind of stuff that is the difference between Trade Ideas and every other vendor. You guys, our simulated trading with real visual stop loss, you know, and being able to modify your strategies and all that kind of stuff. This is the differentiation. You're not going to get this from other vendors. And the ability to have the same exact environment then ported over when you're trading real money. Look at these buttons right here. I use these all the time. Do you know, how would you ever learn how to get, let's say you get into a position, you go one way and it starts to come down. Look at, you can press one button and reverse it. I would never tell you ever to do something like that with real money without ever you having practiced it first. Does everybody understand how important that is? We have that technology to make the practice makes perfect. And again, the beauty is, you saw today, AUPH, this is what we're here to find. It just makes it even better when we find it. It doesn't happen all the time, but out of any vendor out there in this space, we're the only ones that do this. We're the only vendor that makes the call, guys, through technology, not through a guru. You know, you can, this is the other thing, and I'm gonna, you know, we're getting towards the end of the Q&A, but if you go out and play a golf round with Tiger Woods, he's gonna hit the ball awesome. And he's gonna make shots you're never gonna be able to make. Do you know why? Brad, do you know why?
Because he's great.
And he's Tiger Woods.
Practiced a tremendous amount, and he's got a lot of hours under his belt.
People come into education in the stock market following gurus. And again, there's some good teachers out there, but the problem is you're never going to be able to do what they do like the exact same way until you get your own feel. But our education is embedded inside the software for every single stock. Let me pull something up for you guys. So let's go to Apple. You guys, you know, everybody loves to talk about the apples. Okay, let me just blow this up real quick. Do you guys see these dotted lines? This is the conclusion of the Q&A. Okay, does everybody see this? The dotted lines. Every single stock that you pull up has a smart stop and a profit target for you as if you're about to buy it. So this is your guru levels. We don't know if you're going to do it, but every single stock, let me zoom. Every single stock has the information. Bank of America. Here you go. What was this? Sorry, that's Boeing. Okay. Every single stock has it. So Kevin, what we're saying is that for every single stock, we hypothesize that at the exact same time that you look at it, and if you guys are watching Trade Ideas, you can see it for yourself, that you're going to enter right here. So your smart stop would be right around here, and your profit target to take some off the table would be here. So I'm just pulling up stocks that you guys know, like Facebook, you know, and I'm zooming in here. Here it is. So software is assuming you're going to get in here, even though you're not. Here's your stop. Here's your profit target. Your education's built inside. This is what you're paying the $2,200 for the year. It's like $1 a day. Okay, not exactly, but you know what I'm saying.
Math's not your strong suit, right?
Never has been. All right, so you guys saw this. The downside column was really the thing that we were trying to showcase today, like how much would you lose on a trade if every stop was hit? So you can see this, and this is visual, okay? You can sort by it, you can navigate through it, and all of your stops are things that you can move around visually. Practice this, practice through our simulated trading. Can't say it enough. Let me jump back into our Q&A, and I'm going to go right down to, because it's the end. This is what our software costs. Scott, is that the right promo code? Seems a little high, but maybe we're still only giving.
It's supposed to be 15. I copied the wrong page over, so 15% is the correct.
Yeah,
if you refresh the page, it'll show up.
You got to get out of this presentation, yeah, and then back
sure.
into it.
Oops.
Now you can, yeah.
There we go. Okay. So this is how much our software costs on a subscription basis per day, even though you pay yearly or monthly. So you just multiply these numbers by 30. We have a full education and support schedule, unlike any other in the industry. You can look at that up on our website. Webinars like this, where you get to talk to this incredible CEO, this genius, and his assistants. So many assistants.
Oh boy.
Assistants to the genius. But it's a no-brainer, even for the premium. And of course, you can have a discount for the whole year or your first month off. Barry's Trading Room, an incredible opportunity, and I think he's fixed this because this screen was just way too gnarly to follow. I think it has now one stop symbol. We told them, only one, Barry, only one. It's a lot simpler to follow, and there's a whole incredible group of traders that work with Barry every day to find things like AUPH, JNCE, BBIO, etc. So trade-ideas.com/trading room. My friend Jamie Hodge and I do a Trade Ideas podcast where we sometimes get a little, off topic, but usually showcase in a more humorous way a lot of the things that you guys are seeing here today. And we're very easy to get a hold of. Of course, we have information for you to get started in any of this. trade-ideas.com/setup. Lots of free ebooks to help you in any facet of trading. And this is our social media presence, very active on it. Please like us on Facebook and shoot us an email if you have any questions. Scott, I think that's it.
All right, we'll have the recording up later on tonight or tomorrow, and you get an email from GoToWebinar with a reminder of how to find it.
Thank you very much, everyone. Take care and have a great